Hey everyone, so the company we'll be analyzing today in this video would be Sona. So we'll first look at the what does exactly the company does and the fundamentals of it, and also on the technicals, how exactly is the stock looking like. Okay, and whether it's a great opportunity to buy right now as an investor, as a trader, what should one do? Okay, so let's get started. So we'll first study a little about the company, which sector does it belong to, what exactly it does, and things like that. So it's an Indian-based automotive company. So these guys develop mechanical and electrical hardware systems, components as well as base and application software solutions. So these guys are primarily into your automobile sector. Okay, so their performance is majorly linked to the how exactly the automobile sector globally is doing. So when I say why do I say globally? Because most of their revenue is via exports. Okay, so let's look at what exactly it does, the products that it has. So two major products that the company has. One is in driveline parts, right? That is differential assemblies and gears, right? So that is what they do. And the second one is motors. Okay, so these are the two major components that the company has. So driveline part segment. So in this, the company manufactures assemblies, right, and bevel gears, which are both for the electrified and non-electrified passenger vehicles, commercial vehicles, three-wheelers, and all of them, right? And in the motor segment, this company manufactures micro hybrid starter motors for passenger vehicles and light commercial vehicles. So recently, what they have done is they have moved into EVs, right? So EV traction motors and motor control units for hybrid and e passenger vehicles have also come in recently, right? So we look at how they have grown their EV sales over the last few years. Okay, so these are the major products that the company makes. So let's look at the EV play, whether the company is focusing on the big change that is happening in the automobile sector or not. So increasing the focus on EV segment, this company has increased focus on electric vehicles and its revenue contribution, which was just 1.3% in FY19, has increased to 22% as of Q2 of FY22. That is, recently it has moved to almost 22% of their total sales. So they are focusing majorly on the EV thing because that is the trend ahead, right? So revenue mix, if you go by the revenue mix, so if you'll see that the drive line, that is the gears and the assemblies, that is 28 and 18%, whereas the motors, they are actually contributing more than 50%. That is micro hybrid motors, which is 27%, and conventional starter motor is around 24%. So these are the product mix and manufacturing facilities. So they have in total nine, out of which six are in India, one is in USA, one is in Germany and Belgium. So company derives 70, like I was telling you, company derives 75% of the revenue from exports. That is, majorly they are in North America, Europe, India, and China. Recently, they have started increasing their focus more on China because China is going to be the EV hub, right? So that is why they have been trying to uh, do better in China, especially. So in India, who are its clients? So you have Ashok Leyland, Daimler, M&M, and all of those. Okay, so this is about the manufacturing facilities and their presence globally as well as their clients. Now let's look at the fundamentals. Whether fundamentally it's a great buy at the current levels or what exactly is it? So the market cap is 24,000 crores. It's a mid cap company. ROC is impressive around 21%. The operating profit margin is very good for an automobile company, right? Anything above, let's say, 15% OPM is also great. But this company has an operating profit margin of 25, which is very good. And that is the main reason it commands a P of 65, a premium of, premium P. That is why it trades at 65. So the debt equity, hardly any debt on the company, and also the I from the IPO they raised about 800 crores, which is still there with them, right? So what is the company doing? The company has been continuously making use of the this thing cash that they are making and reinvesting into making new products and things like that. So that is what is driving their growth. If you look at their quarterly results also, Y on Y, it's a good, very good beat. So even during this slowdown that we have seen in the last 1 year, the results have been impressive. The only thing why the stock corrected from such a high level is it was trading at very high valuation, and that is now corrected. But from a level of 65 P, I don't see much downside for this stock because usually very good quality stocks they command a premium over the other stocks, right? So recently, as you might have seen, it's a promoter, they kind of exited from this stock, that is Blackstone. They were holding this particular company was via Singapore 7 Topco thing. So they sold and exited almost 20% holding that they had. And as you can clearly see from this thing, that a lot of quality mutual fund guys and even government of Singapore have gone ahead and bought a chunk in that. Okay, so whatever liquidity had come in, right? Majority of it has been cornered by the big guys itself. Okay, so nothing to worry on that front that, okay, now the promoter holding would drop from 53% to 33%. That is fine enough. Good quality companies, once they become big, it doesn't matter whether they have high promoter holding or low promoter holding. All that matters is the fundamentals have to be good, the cash flows have to be good, and the company should continue its growth trajectory, right? So now let us look at the technicals of it. So if you look at it, the stock has made some kind of a double bottom. This huge bar that you see here, green color one, so that was majorly caused because of the selling by the promoter that came in, right? Which was anyways cornered by the big guys. So in case if it does a double bottom and starts moving up, 480 would be its first resistance, which is its neckline. If that is taken out, high chances that it can again continue moving up. So now on the global scenario with the liquidity improving and possibly the economic recovery is going to be worldwide, chances are Sona Comstar, although which is trading at 65 PE, should continue moving ahead. It need not give you like a massive gain, but as their earnings grow, it should still command a premium of 60 kind of a P and continue to give you decent returns in the years to come. So this is about Sona Comstar. So whether I would be a buyer in Sona Comstar at this level, yes, I would be willing to take that risk because it has made some kind of a bottom and also their earnings are impressive. So looks like a decent compounder. I would not say a great multi-bagger because the valuations are already pretty high, but a decent compounder going forward. I would be willing to take a bet on this particular company at the current levels. Hope this helps. Thank you.